Market downturns, while challenging, often present unique opportunities for investors to acquire quality stocks at discounted prices. The recent decline in the S&P 500, driven by trade tensions and tariffs, have created a landscape where fundamentally strong companies are trading below their intrinsic values. This video will explore 5 companies: Alphabet, Procter & Gamble, Nvidia, ASML, and Amazon, analyzing their recent financial performances, valuation metrics, and growth prospects. Firstly, let's start with Alphabet, the parent company of Google. It is a global technology leader with a diverse portfolio encompassing search, advertising, cloud computing, and emerging technologies like artificial intelligence. In quarter 1 of 2025, Alphabet reported revenues of $90.23 billion, marking a 12% year-on-year increase. Net increase surged by 46% to $34.54 billion, or $2.81 per share, surpassing analyst expectations. The company's operating expense rose to $30.61 billion, with an operating margin expansion to 34%. Some key growth drivers can include the Google Cloud. Revenue increased by 28% year-over-year to $12.26 billion, with operating income rising to $2.18 billion, reflecting a significant improvement to profitability. Also, advertising, as Google's advertising revenue grew 8% to $66.9 billion, driven by continued strength in search and YouTube platforms. The AI initiatives. The rollout of Gemini 2.5, Google's advanced AI model, and the expansion of AI overviews in search, now reaching 1.5 billion users monthly, underscored the company's commitment to AI-driven growth. Additionally, Alphabet announced a 5% increase in its quarterly dividend to 21 cents per share and authorized a $70 billion stock buyback program, signaling strong financial health and shareholder performance. As of April 25, 2025, Alphabet stock closed at $159.28. The stock has shown resilience with a 52-week range between 100 and 169.20, indicating strong recovery and investor confidence. Alphabet's continuous investment in AI and cloud infrastructure positions it well for future growth. The company's leadership in digital advertising and expansion into new markets such as autonomous vehicles and healthcare provide additional avenues for revenue generation. Next is Procter & Gamble. Procter & Gamble is a leading consumer goods company with a global footprint and a portfolio of iconic brands. Its products are staples in many households, providing demand stability. In its 2025 earnings report, P&G reported core earnings per share of $1.54, up from $1.52 in the previous year. However, net sales declined by 2% to $19.8 billion, reflecting challenges in the consumer market. The company adjusted its fiscal 2025 core EPS guidance to $6.72 from $6.82. As of April 2025, P&G stock closed at $159.53. The stock has experienced volatility due to market conditions, but remains a staple in many investment portfolios. P&G's expansion into health-conscious products and emerging markets present growth opportunities. Its robust distribution network and brand recognition further supports its market position. Thirdly, it's Nvidia. Nvidia Corporation is a leading designer of graphics processing units, or GPUs, and system-on-a-chip units, SoCs, for the gaming and professional markets. The company has expanded into AI, data centers, and autonomous vehicles, solidifying its position as a key player in the tech industry. In its fiscal year of 2025, Nvidia reported record revenue of $130.5 billion, up 114% from the previous year. The GAAP earnings per diluted share were $2.94, up 147% year over year. The company's data center segment achieved record revenues of $35.6 billion in quarter 4, increasing 16% from quarter 3 and 93% from the previous year. And as of April 25th, 2025, Nvidia's stock closed at $106.43. The stock has shown resilience with a 52-week range between 85.08 and 109.16, indicating strong recovery and also investor confidence. Nvidia's continuous innovation in AI and data center technologies positions it well for future growth. The company's leadership in GPU design and expansion into new markets, such as autonomous vehicles and healthcare, provides additional revenues for revenue generation. Next is ASML. ASML Holding is a Dutch company and a leading supplier of photolithography equipment for the semiconductor industry, as advanced technology is critical for producing smaller and more powerful microchips. This stock is the third biggest holding in my portfolio. In quarter 1 of 2025, ASML reported total net sales of 7.7 billion euros and a net income of 2.4 billion. The company expects total net sales for 2025 to be between 30 billion and 35 billion, with a gross margin between 51% and 53%. So as of April 25th, 2025, ASML stock closed at $675. The stock has experienced fluctuations due to global trade tensions, but remains a strong performer in the semiconductor sector. ASML's continuous investment in cutting-edge technology and its critical role in the semiconductor supply chain positions it well for future growth. The company's leadership in photolithography equipment and expansions into new markets provide additional avenues for revenue generation. Also, ASML has demonstrated a strong commitment to returning value to shareholders through consistent and growing dividend payments. The dividend yield as of April 25th, 2025, ASML's full dividend yield stands at approximately 1.14%, which is competitive within the semiconductor equipment sector. The dividend per share, the company has declared a total dividend of $6.40 per ordinary share in 2024 financial year, representing a 4.9% increase compared to 2023, and mainly over the last 5 years. ASML has achieved a compound annual dividend growth rate, a CAGR, of approximately 20.8%, reflecting its robust financial performance and commitment to shareholder returns. The company's dividend payout ratio is around 32.4%, indicating a balanced approach between rewarding shareholders and retaining earnings for reinvestment. Next, we have Amazon. Amazon is a global e-commerce and cloud computing leader and has consistently demonstrated resilience during economic downturns. Its vast product offerings and robust Amazon Web Services, also known as AWS, platforms positions it well to serve consumers and businesses seeking value and efficiency. In its 2024 annual report, Amazon reported an 11% increase in net sales, reaching $638 billion. Operating income rose by 86%, reflecting efficient cost management and strong sales performance. The AWS segment sales increased by 19% year over year to $107.6 billion, highlighting the company's successful expansion in cloud services. As of April 25th, 2025, Amazon stock closed at $186.54. The stock has shown resilience with a 52-week range of between $100 and $191.20, indicating strong recovery and investor confidence. Amazon's investment in technology and supply chain optimization continues to enhance its competitive edge. The company focuses on integrating physical and digital retail experiences, along with the expansion of AWS, positions it to capture a larger market share in the evolving digital landscape. Investing during market downturns requires carefully selecting companies with strong fundamentals, resilience, and growth potential. Amazon, Procter & Gamble, Nvidia, ASML, and Alphabet each exhibit these qualities, making them worthy considerations for investors aiming to navigate current market challenges and position their portfolios for long-term success. I hope you enjoyed this video. Let me know in the comments what stock you are buying now. Have a good day, watch my other videos, and thank you for watching, and subscribe if you haven't already. Bye bye!